Hey everyone, Zishan here from Royal Page Signature, and this is the Market Minute for June 2024. In this video, we're going to look at sales, listings, months of inventory, and price across the GTA, Toronto, and New York region, and we're going to compare them June 2023 to June 2024. We're going to jump right into these numbers and look at the sales volumes. Sales volumes have dropped off across the board. In the GTA, we saw a 17% decrease in sales year over year. In Toronto, we saw a 21% decrease in sales. We went from about 2,800 sales last year to 2,200 sales this year. And in New York region, we went from about 1,300 sales to just under 1,100 sales for the month of June. And that represents a 17% decrease in the amount of sales. Now, keep in mind, the Bank of Canada has started to move rates down. And despite that, we have seen sales start to trail off month over month and year over year. With respect to our inventory, our listings, we're starting to see listings grow substantially. We have a 70% increase year over year in the amount of inventory available for sale. In June 2023, we were about 14,100 listings available. And in June 2024, we're up over 23,000 listings available for sale. We haven't seen this much inventory on the market in about 20 years. So if you're a buyer, this is a very good time to be engaged in the market and looking for opportunity. In Toronto, we saw a 74% increase in the amount of listings. We went from 5,500 to 9,600. And in New York region, we went from 2,561 listings available for sale last year to 4,253. That represents a 66% increase in the amount of inventory year over year. I assume that the thinking was for a lot of sellers, the Bank of Canada has started to decrease rates, so this would be a good time to go to market and try and take advantage of the potential buyers returning to the market, although a 25% decrease in basis points does very little to affordability. With respect to our months of inventory, in June 2023, we had just under 2 months of inventory, and in June 2024, we're at 3.8 months of inventory. So we can see that this number has almost doubled year over year. In Toronto, we went from 1.95 months of inventory to 4.3 months of inventory, and in New York region, we saw the same trend. We went from 1.97 to 3.93 months of inventory. And just a reminder, 4 months of inventory is usually a balanced market. Above 5 months is a buyer's market, and below 4 months is technically a seller's market. So you can see that we're sort of in that balanced territory in our market right now. This is what a healthy market looks like. This is what a sustainable market looks like, where we're not doing sort of this up and down. Inventory and sales are balanced. It does feel a little slower out there, but this is sort of what a normal market feels like. With respect to price, despite the divergence in sales and inventory, prices have remained very stable. We've noticed just a 1.7% decrease in the average price year over year. In Toronto, we're seeing slightly up, 1.85% increase in price, and in New York region, very flat, a slight decrease of about 0.5 point. But the fact that sales are going this way, are trending lower, and our inventory is trending higher, yet prices still remain very stable, speaks to the resiliency of our market, because people do still need housing and sellers are hanging on. We're not seeing a lot of distressed selling at this moment in time. So prices remain stable, but inventory is going up and sales are starting to decline. Again, our market is seasonal. These are the summer months, and interest rates are still high. So this could continue through the summer. It'll be interesting to see what the Bank of Canada does next. July 22nd is the next interest rate announcement. I suspect that they will decrease rates once again by 25 basis points, but we will see how that goes. Thank you for taking the time to watch this video. If you have any questions, please do let me know. 416-450-3163.